So we're looking at the prospect of them passing this bill, which basically shifts all regulation of the crypto industry over to the CFTC, and then having the CFTC be governed by a single guy who is a former crypto lobbyist. That's a recipe for disaster.
The crypto industry spent a combined $130 million in backing pro-crypto candidates last year. And right now, it looks like that investment might just be paying off. In 2 days from the time of this recording, the Senate will be voting on the Genius Act, which, if passed, is expected to be a big win for the industry. Henry Burke is a senior researcher at the Revolving Door project and somebody who has been keeping a close eye on the crypto industry's rise in Washington. Henry, thank you so much for coming on.
Thanks so much for having me.
So first, please help us explain, what is the lay of the land with the crypto industry? Who are the big players? What do we mean when we talk about the crypto industry?
Yeah, the crypto industry is pretty diverse. It kind of kicks off, I guess, with Bitcoin. There's this anonymous guy who creates Bitcoin, which is a form of blockchain that people then quickly latch onto. When I was probably in middle school, I remember hearing certain people talk about it as like, this is the future. You can buy a Bitcoin for a few cents. Every once in a while, somebody would be like, it's so cool. There's a pizza place that accepts it. And over the years, it's grown. So there's a lot of new companies. There's companies that enable, retail investors to trade in different types of cryptocurrencies. There's cryptocurrency companies that offer different products. They've kind of created basically a mirror image of the financial industry, but all based on the blockchain and this technology that's kind of the underpinnings of crypto, digital currency, digital assets, whatever you might, refer to it as. They've kind of created a mirror image to the traditional finance industry, just much less regulated.
Right.
I think right now the biggest player is probably Coinbase. But, other players over the years have definitely made their names known. FTX probably being the most prominent of those.
Coinbase has been talked about a lot on social media recently because I believe they sponsored that big military parade.
They sponsored the military parade yesterday. Yeah, that's cool. They, along with a bunch of other crypto companies, dumped a bunch of money into Trump's inauguration fund, which, is just one of those parts of American politics that always confuses me. It's once you get elected president, everybody kind of agrees that you should have a big slush fund where corporate donors can just throw money at you. And the crypto industry was very eager to do that with Donald Trump.
But out of a sense of patriotism, of course, right?
Of course. They want nothing more out of it. So Coinbase has done that. Coinbase has tons of ads, but also they've just been, huge movers and shakers in the push to enact the crypto agenda in Washington, D.C. They're also, ironically, the only company that hasn't had their founder go to jail. At one point, there was like a big 3 crypto firms. There was Binance, led by a guy who goes by CZ. There was FTX with Sam Bankman-Fried, obviously, who is currently in jail. And then you have Coinbase with Brian Armstrong. And Coinbase has faced many legal challenges, but Brian Armstrong, free from jail. CZ actually got sentenced, I believe, to 4 months in jail last year, which he served quickly and now is appealing for a pardon from Donald Trump. And Sam Bankman-Fried is still in jail, but who knows? Maybe he'll buy enough of the Trump meme coin to secure a pardon for himself.
It's a get out of jail free card. Not for free, actually. Certainly, it's kind of an expensive get out of jail card, but it is a get out of jail card you could purchase. Okay, so when did the crypto industry start getting politicized? From my understanding, it seems like a lot of them were really engaged during the Biden administration initially, because they saw a Democratic Party which they perceived as much more against them, and a Republican Party which was more open to their message than previously.
Yeah, so I think you could kind of really say that there was an explosion of growth in crypto under the first Trump administration, but they were left kind of alone. They were left somewhat unchallenged. So they're growing in power, growing in the money that they have at their disposal, and growing in confidence. And when the Biden administration comes to the fore, they start exerting their might a bit more. But I think actually the first part that you see them exert their might is really with Sam Bankman-Fried. So he is, at one point, everybody now remembers him as the criminal, but at one point he was like the wonder kid. Everybody referred to him as a child, but he was like a 32-year-old man. Just want to, get that straight. But there was like this wonder kid walking around Washington, D.C., who had made billions of dollars on crypto, and he was ostensibly doing a bunch of lobbying on his effective altruism project. So, preventing pandemics, definitely something that's good, but he was exerting his power in a way that maybe wasn't always about pandemics, but he was donating heavily to Democrats, and he was known kind of as a Democratic influencer. Secretly, though, under the table, he was also donating quite heavily to Republicans. And this started under the first Trump administration and kind of leads just into, I believe, the Biden administration. Anyways, after a few years of that, his house of cards comes tumbling down. It turns out that he's been, stealing customer funds to cover his losses at the trading firm that he also ran through FTX. And a lot of Republicans started accusing Democrats of being super involved with the crypto industry because Sam Bankman-Fried was a big bankroller of Democratic campaigns. Elon Musk, I think, even alleges that Joe Biden is definitely going to pardon Sam Bankman-Fried, something that did not happen. And after that, I think there's like a reticence for Democrats to back crypto. And so under the Biden administration, he appoints a SEC chair, Gary Gensler, who has a different stance, obviously, than the Trump administration SEC. And he starts to view the growing crypto industry as something that needs to be regulated. It's not just that FTX kind of collapsed in, record style. It's like the biggest fraud in U.S. history, but there's just constant crime in the crypto industry, whether it's fraud, stealing from consumers, not protecting consumers' data, et cetera, et cetera. And Gary Gensler decides to start regulating things. And his perspective is that securities law already exists. The SEC has the right to regulate cryptocurrency. And so he starts cracking down on these companies, a lot of times alleging they're selling unregulated securities, which is illegal. And I kind of agree with him on that is what they're doing. But this is like an existential crisis to the crypto industry, which has been selling unregulated securities. And that's the entire premise of their industry. So they start getting all hot and bothered. And I think that that's really where you get to the point where we are now, where they have started aligning themselves more forcefully with Republicans, but maintaining some of those key Democratic ties to kind of push their agenda through the legislature. So obviously, as you said, huge donors to Donald Trump. They were also like instrumental in ruining Sherrod Brown's reelection chances in Ohio. I think they spent over $40 million in just that one Senate race to ensure that he, a crypto skeptic, didn't win re-election. And they've also been backing some Democrats as well to try to create a bipartisan support for, their scam.
It's interesting because I remember before the election listening to some of these guys on the rising, what we call now the tech right, talking about the regulation of crypto like it was the most draconian and authoritarian thing. I mean, it really sounded like 1984. Mark Andreessen is like, the regulators would just come after you. They'd shut you down. You couldn't do anything. They would just fine you for everything. I don't know.
Yeah.
I find it really, it's kind of funny. And so like, is it all about basically the SEC saying, hey, these are unregulated securities, like this is a problem? Or was there other things that the government was doing to go after these crypto companies?
Yeah, it's not just the SEC. The CFTC, the Commodities Future Trading Commission, is also a regulator in step with this. But yeah, it's a complicated dance. But basically, there's two like major securities and commodities regulators in the U.S. You have the SEC, which is kind of what you like normally think of as like the watchdog on Wall Street. You know, if you're doing insider trading, the SEC is going to get you. And they tend to regulate more like traditional markets, stuff regarding stocks. They regulate anything that can be construed as a security. The Commodities Future Trading Commission is a much smaller agency. It does not get the same amount of funding as the SEC. It is not staffed in the same way. So I think it gets about 1/3 the budget of the SEC, and it has about 1/6 of the staff. And they are tasked with regulating more complicated financial instruments. That's commodities trading, futures trading, that kind of thing. And so because of that, there's kind of a split between who regulates what. That obviously is going to lead some fights. So there's constantly a fight between who's going to regulate the crypto industry at large, what part of crypto would be regulated as a commodity, which part would be regulated as security. But in the end, I would say that the Biden administration kind of comes down to the Gensler line, which is generally the SEC has the prerogative to rein it in. But there's a lot of Democrats who would fight about that. But as you were saying before, I think that, they do kind of view any regulation as an existential crisis to their way of doing business. And it's the same thing that you see in tech over and over again. When Uber faced the prospect of treating its employees as actual employees, they had a meltdown. And this is basically the same thing. When existing laws apply to tech, they view that as an impingement on their right, because it exists with like coding, it should be treated differently than every other process that's already existed.
It's totally different. Trust me, bro. Now, of course, the agencies that you're mentioning, nobody works there anymore because Doge probably fired everybody. So I imagine they're less active these days, but they were much more active under the Biden administration. Now, I want you to help me understand this debate more, because you mentioned commodities, securities, or two different regulatory standards applied to both of them. What is the difference in regulation, and like what's the justification for securities being held to a higher regulatory standard?
Yeah, so the CFTC is a newer institution. So that's like one part of it, is just the SEC is the longstanding regulator of Wall Street. I believe the CFTC comes about sometime in like the 70s, maybe the 80s. But basically, there are two different regulators that regulate different products. And that's kind of where this difference comes from. The SEC deals with a lot of complicated Wall Street financial instruments, but they also help protect people. They have, I believe it's called like an investor protection mandate. So basically, when you have a 401k and you're investing in, the S&P 500 index fund, the SEC has a mandate to try to protect you from getting scammed, getting played. And this comes about in tons of different ways. Obviously, insider trading is like one of the ways to do it, but any type of market manipulation is a threat to your security. And the SEC gets some of its funding from charging little fees on different transactions. So that also makes them a bit of a more robust agency because it insulates them somewhat from Congress's manipulations, right? If Congress isn't able to, take a few million out of your budget every year, you have less of, you're less puppeted by these insiders in the halls of Congress. The CFTC, though, is different. It just has less authority. It has less legal weight, when it comes to protecting people and issuing rules. So that's the first and foremost thing. And then they obviously have a much smaller staff. They have a smaller budget, and their mandate doesn't go as far. So when this debate is happening, that's the context they need to keep in mind. And basically what ends up happening under Sam Bankman-Fried first, and this is a fight continuing to this day, is crypto starts pushing to have the CFTC be their chief regulator, knowing that it's a lot easier to kind of hold sway over the CFTC as this smaller agency that is more beholden to Congress than the SEC. And so there's a bill right now before the House that would kind of do that, just shift all regulation of crypto over to the CFTC. The real thing is it's a complicated legal process to determine whether or not something is a commodity or a security.
But what is the broad strokes? Like, what is the broad strokes difference between the two types of products?
Yeah, so this is something that's been litigated in court, and I am no lawyer, not really one to dip my toe into it. But I think generally a commodity is something it is limited quality. I think a good kind of the quintessential commodity would be like gold. If something is operating like gold, it's a commodity. And then if something is like a stock, that's a security. And so that's kind of the quintessential versions of these two things. And I think that there have been disagreement about which cryptos count as commodities or securities, but I think most experts would come down on the line saying that, there are some that are securities, some that are commodities. I believe even Chair Gary Gensler said that he believed that Bitcoin was a commodity. But the crypto industry as a whole doesn't want any of the crypto currencies to be regulated as a security, whether or not they are.
Yeah, no, I actually really like that example. It's like, stocks, bonds, these are security type assets. Of course, it is a really complex field about these definitions. These are definitions that are in question. Of course, lawyers are in this area, so they're always going to argue about everything. But it seems like securities are the kind of things that you get monthly payments from, or you could at least really yearly payments or some sort of dividend. Stocks, sometimes they don't send you out a dividend, but they could send you out a dividend, and they do stock buybacks, things like that. There's some sort of cash flow from it. And it seems like commodities are the kind of things where that doesn't really happen. Like all sorts of scarce products and resources that people purchase. And it is very clear, at least to me, with my surface level understanding of the crypto industry, that there's some cryptocurrencies that actually guarantee you certain interest rates, like certain payments on a routine basis. I know, I believe Coinbase is one of their big things, actually, that they'll guarantee you getting a certain rate of return on if you hold some of your coins with them. And so that would seem like almost like clearly within the definition of a security. Of course, they don't want to have the higher regulatory standard.
And they were charged with operating in unlicensed security exchange under the Biden administration. And just about day one of the Trump administration, he directed the SEC to drop that case. So it was litigated for a couple of years. It seemed like maybe the SEC was going to win that one, but you can't win it without the president's support, the executive branch kind of puppeting that.
Is there any relevance of the CFPB, Consumer Financial Protection Bureau, to the crypto industry's rise? As many viewers probably know, the CFPB is one of those agencies that was targeted the most initially by Doge. They basically tried to completely shut it down. It's kind of a ghost organization to today because courts have said, hey, you have to actually keep some employees. You can't just shut down agencies unilaterally with presidential authority. But it doesn't fully exist. Did the crypto industry contribute to one of the many reasons why they decided to go so hard after that agency in particular?
Yeah, the CFPB is, a product, first of all, of one of their arch nemesis, Elizabeth Warren, right? So under the Obama administration, she's the law professor that dreams up this idea of the CFPB. Republican senators actually block her nomination to that position. That's why she decides to run for Senate. And it's because it exists as, a consumer protection agency. So yeah, anytime that somebody is like, hey, Coinbase is charging me fees that I was unaware of, anytime that a cryptocurrency company is acting pretty shady, taking money from consumers, not protecting their data, that kind of thing, the CFPB would get involved. And they're very much a target of the crypto industry. I believe it's the Genius Act actually specifically exempts stablecoins from oversight by the CFPB. So definitely, they do not like it. But the CFPB has more of a consumer protection mandate than it does overall, securing the financial system at large.
Right.
The SEC not only is trying to protect consumers, but they're also trying to make sure that we don't have, another Lehman Brothers 2008 style meltdown. And the CFPB is not really trying to do that.
Well, it's really just anti-fraud. Like if you scroll through and you just look at their cases, it's like big bank lied to people about the fees that they were charging them. Big bank advertised XYZ thing and totally did not provide it. Which, of course, I find it very interesting that is part of the deep state bureaucracy, which is apparently the main reason why the economy is not growing in the United States, because we have some consumer protection laws. But I digress. So bringing it back to the crypto industry's current involvement, what is the kind of policy agenda they'd like to see? And why are they so specifically interested in the Genius Act, which is really a new set of regulations for the stablecoin industry? Why would they be interested in having more regulations on themselves?
Yeah. I think that we can kind of break down the current like crypto agenda into 3 boxes. So we have the Genius Act, which is stablecoin stuff. We have the market overall structure bill, which is kind of their white whale. This is the one they've been chasing for the longest time. And then we have like another pot of small things, which are just like overt corruption. So in that, we can put like Trump's crypto strategic reserve, where like it's literally just using taxpayer money to inflate crypto prices. That one, we can delve into it because it's kind of interesting how brazenly corrupt it is, but it kind of stands aside. It's not their main bread and butter legislation.
Well, it only works with this administration. It's not really a congressional priority, I guess, so much as like a Trump-specific priority. I guess we could talk about it for a second. I mean, Trump's idea was just to take a bunch of taxpayer money, buy cryptocurrency, which jacks up the price, right? Because the supply is the same, the demand goes up. And that means that every single person who owns crypto is now richer on paper and they can sell at a higher price at the expense of you as taxpayers.
Exactly, yeah.
Right.
If you're a taxpayer, you are subsidizing everybody who owns a Bitcoin, basically. So that's just like the brazen corruption side of things. And I think that's crazy. Crypto industry definitely loves it, but it kind of stands aside from the like more complicated legislative measures. And so what you were saying earlier, the Genius Act is kind of the first up on the agenda. It regulates stablecoins. And stablecoins are basically cryptocurrencies that are pegged to a value. In this case, usually the US dollar. So let's say we have a stablecoin, the Henry Burke stablecoin, and I like make it so that 1 Henry Burke stablecoin is always equal to 1 US dollar. That's what they try to do. At one point, there was like a push to like use algorithms to stabilize the value of a stablecoin to $1. That didn't work. It ended in massive failure. But this one is kind of, the idea is we'll back these with currency reserves or something similar, probably T-bills. And we will use them as like a crypto, like an online version of $1. And the Genius Act, they already exist. They're in widespread use. I believe the largest stablecoin out there is Tether, which Howard Lutnick, Trump's commerce secretary, is basically the banker for Tether, or was before he handed over his investment firm to his 2 sons to take his role.
Zero conflicts of interest. I see no
Zero conflicts of interest. I'm sure they were the most qualified people out there, his like 2 20-year-old sons, to take over the massive fund that he runs. But the Genius Act has like these dangerous carve-outs in it. It basically empowers the crypto industry in ways that they otherwise couldn't, but guarantees they are never challenged by a Gary Gensler like person going forward. So that's why they're looking for more regulation. It's because they're looking for easier regulation than they could possibly face.
Because some regulation is necessary for it to be really widespread, right? For investors to want to put their money in this sort of asset. And they just want to lock in basically the lightest form of regulation and put in exemptions, as you mentioned. They kind of protect them from all the types of regulation, which are actually going to be less profitable for them. I want to understand a little bit more why stable coins are useful. I imagine to some people that are listening to this, they say, okay, well, these stable coins are just like US dollars. They're worth the exact same, and you can use them online. Well, guess what? I have a bank account and I can already use that online. So what's the value add of using this intermediary stablecoin instead of just using normal digital US dollars?
Yeah, it definitely can be useful theoretically, at least. I think the idea is that transaction times can be a little faster. One of the reasons why big business, I think, is kind of interested in stablecoins, and actually with the seemingly imminent passage of the Genius Act, Amazon and Walmart have talked about starting their own stablecoins, and Facebook has revived their plan to issue a stablecoin currency as well. With the idea basically being that it could allow them to get away from like credit card transaction fees, which is one of those things that like in day-to-day life we never really think about. But
I think about it all the time. Every time I swipe my card.
Exactly. You're getting those American Express points because they're charging the retailer. And so
up to 5%, I believe, maybe even more than that. Vendor transaction fee.
Yeah, and that adds up, especially like if you think about every transaction that is transpiring at Amazon or Walmart, it's tons of money. And if they can kind of become the credit card issuers in this case, the people affecting the payment transactions, that is a huge boon to their, their bottom line. And the same thing applies for non-big business, but stablecoins. If they can charge a transaction fee, they can become the ones that are doing that instead of American Express, MasterCard, whatever, Visa, huge profit right there.
Well, and that's why so many different companies before stablecoins were just trying to get you to get their credit card. It seems like everybody has a credit card these days. And Starbucks has their own app that they want you to use. And all the money that's stored in that app, that through your gift cards and the like, is a huge resource for them.
Exactly. Yeah.
Right?
Well, that money is with Starbucks. They're investing it.
Right. So at a minimum, whenever they issued their own credit cards and stuff, they're saving at least on transaction fees, right, for themselves whenever you use it to purchase their products. And whenever you use it to purchase other products, they're actually charging transaction fees to vendors. And all of us consumers, we pay these fees, right? The businesses, whenever they pay 3%, 5%, 2%, whenever you swipe a card, they raise the price on everybody. And we get a little bit of it back in those points. So my understanding is exactly what you said. With these stable coins, you don't have to use these payment processors, oligopolies anymore. And actually, my understanding is the technology is just better. So like the transaction is much faster. You can get some more information from it on the back end if you design it properly. And like we have decentralized databases. So like one bank has a database, another bank has another database, and they have to reconcile their payments. So if I pay you $50, they have to make sure that they minus $50 from my account and they add $50 to your account. With these crypto technology, it's just like instantaneous. Like it's like if I gave you $50 US, I don't have it anymore. You have it. That's done. And that's why I think some countries around the world are investigating the digital currency idea, like China.
Yeah, no, there's a multiple countries that have talked about central bank digital currency, and that's obviously a threat to like the crypto industry. And so I think it's really funny actually tracking like their objection to it, and some of the ways that they're doing it now is just by trying to they're conservatives, so they immediately pivot to like conspiracy theories. So if you listen to like some conservative commentators talk about the idea of a central bank digital currency, which is basically a stablecoin version of the dollar, they'll be like, oh my God, it's so the government can, terrorize you. They can track your every move, which of course they don't really object to when it's a private corporation. But the idea that like the Federal Reserve would issue this is somehow some great tyranny.
A private corporation that is likely sharing your information with the U.S. government. I think that's actually an extraordinary point because, yes, if anybody's ever heard the word central bank digital currency, CBDC, you've probably heard it from a right-wing podcaster who is just totally terrified of this idea of the U.S. government adopting this crypto technology that they consider to be the most innovative, amazing thing ever whenever it's done by private businesses. And it's because, well, there's really no point of these guys if the U.S. government just adopts it. right? There's really no point at all. Why would you go to some private third party whenever you could just have your normal US dollars from the central bank? So yeah, I find that really interesting. So we understand the Genius Act now. Now you said there was this bigger market structuring legislation you wanted to talk about. Go ahead.
And before we do that, I just want to say one quick thing on the Genius Act that is the real, my main concerns with it is that the plan with the Genius Act is to kind of integrate stablecoins into the traditional financial sector. So that's also the big boon to crypto when this transpires. Until now, crypto has kind of existed in this isolated parallel universe. And so whenever there's a massive crash in crypto stuff, you hear about it from like your gambling addicted friend and nobody else because it doesn't affect normal people, right? Wells Fargo isn't threatened. Insurance companies and their investments aren't threatened. Your 401k is probably not threatened as well. And part of the big push with this Genius Act is that it kind of integrates traditional finance with cryptocurrency and thus ensures that if there is a big crash, the government might have to step in, might have to kind of back depositors, bail out these companies. And so that's a big part of the push behind the Genius Act is to give these companies Fed master accounts, which is kind of a key part of that. Ensure that basically stablecoin users get functional FDIC protection without actually paying the fees that gives banks FDIC insurance and that kind of thing. So think about it as a way to ensure that the money that your bank is being charged to give you, deposit insurance is being used to subsidize cryptocurrency holders.
So would your position be on this that it'd be okay to integrate them into the financial system if they had to pay all the fines and be held to the same regulatory standard as everything else in the financial system? Or do you think that they just shouldn't be integrated at all?
I think at the current state of the cryptocurrency sector, it is so riddled with crime, fraud, violations of anti-money laundering laws, lack of consumer protections, and lack of oversight that it is good that it's kind of siloed off. And so I think that that's something that legislators should be a little more careful with is integrating the two. And we saw this right in 2023. There were three banks that collapsed. It was Silicon Valley Bank first, and then we saw Silvergate and Signature banks as well collapse. And the reason why those three banks all collapsed and what set them apart from other banks is they're really tied into the crypto sector. And the reason why it didn't really affect the rest of the financial sector was that other banks had been wary of serving cryptocurrency, and that's why they were protected in ways that those three were not.
Interesting. So the current siloing has benefits. Yeah, I think that if you ever were going to bring them really fully into the fold, you'd really want to clean up the industry first. Because as you mentioned, it seems like there's some really huge problems with how these crypto companies are currently operating and what they're being used for. Now, I think that's it on the Genius Act. Mm-hmm. Let's talk about the rest of the crypto sector. We talked about stable coins. I think to me, that seems like intuitively, I think the one part of crypto that actually seems pretty useful. What's up with these other crypto financial products? Are there any useful things about them that you're aware of? And then what is like the broader agenda that regarding those assets that the crypto industry is looking for?
Yeah, I think there's idyllic, utilitarian uses. So theoretically, cryptocurrency should be a way to transfer money across currencies fairly effectively. You'll often hear cryptocurrency proponents talk about that. That's actually one of the reasons, apparently, why El Salvador adopted, I think it was Bitcoin, as their legal currency for a while, which that resulted in massive failure. But the idea was El Salvador's economy depends greatly on remittances, basically people in the United States sending money back home. And the idea was that Bitcoin would allow them to do that without using like Western Union, which charges really high fees, enabling more money to get back home. The problem is it doesn't tend to work like that. It's just really complicated and hard to use, right? I think just like the idea of explaining how to use Bitcoin to my grandma just fills me with dread. So the idea that, people are somehow using this directly is kind of a lie. They're going to have to interface with some sort of platform that will be charging them fees, and it largely seems to end up somewhere along the baseline of where it already was. But beyond that, I mean, a lot of people are excited at the prospect to get rich off Bitcoin. If you go, on TikTok, on any social media platform, I feel like you'll very quickly encounter somebody who got rich. They made it big off of investing in Bitcoin or Dogecoin or some other, meme coin of some sort. And that's very alluring in the same way that like sports betting is very alluring. Everybody wants to get rich. And I think that that's just a huge driver of cryptocurrency investment, is that line goes up and people think that they can get in where line was at the bottom, and line goes up, they're going to be rich. Sadly, though, I think we've seen so many pump and dump schemes, that people are largely losing money, and and there's a lot of shadiness.
The people that make tons of money from crypto are the ones that make TikToks. The ones that lose tons of money and lose their house, they're the ones who don't make TikTok accounts. So like, it's a zero-sum game, it really seems, because for every gain there's somebody losing. It's a speculative asset. Like, what kind of value is Bitcoin adding? Yeah, there's these lower transaction costs, but nobody's actually using this for transactions. There's the other values of currencies. Go ahead.
Oh, well, and also there's just like a lack of protection to it, right? I'm not sure if you saw that recent news story in New York where a man was basically held captive and tortured to try to extort his Bitcoin fortune out of him. I think it was for like 2 weeks he was tortured, an Italian tourist. And it's because we basically have invented a monetary system where you can have like a USB drive that holds millions of dollars. Obviously, that will not happen in the same way with traditional financial products, because your bank would be like, it seems suspicious that you can't just be transferring several $1 million to a shady bank account, maybe without confirming it with your bank first, making sure that you aren't being tortured. But in this case, we just have a few lines of code that you switch it. It's completely anonymized. And so people are much more willing to engage in crime using this financial system as well.
Right. It just doesn't seem like there's this crime element that you mentioned. There's the fact that you can't really use it for transactions at most places. There's other issues as well, which is that it's super unstable. So one of the values of currency is that it's like a store of value. It's not really a store of value. It's a speculative asset, right? It just goes up and down like crazy. And then another value of currency is that it's a unit of account. Nobody's accounting for the cost prices of things in crypto and Bitcoins. Now, I've seen that one of the arguments for investing in cryptocurrency, not just in speculation, like, hey, other people are stupid, they're going to buy it, it's not really worth much, but you're going to make money. The argument, like the substantive argument I've seen, is that cryptocurrency use around the world is going to grow over time. And usually these people are not making the case that like, oh, they're foreign dictators that are just going to buy it because they like crypto. But the argument is, well, there's a lot of countries with hyperinflation, so they're going to buy Bitcoins. Just like people in those countries are going to start buying crypto, just like people in Venezuela currently use US dollars a lot of the time. But I feel like there's an issue with that point of view, which is like, Bitcoin's like super volatile. Why would you not buy like a stable currency? It's like, oh my God, we have radical inflation. Let me get an asset with like radical deflation and inflation, like depending on what period of the cycle you're in. I feel like you would just want to use US dollars. And if you want to use crypto, you'd probably use like a stable coin, no?
Yeah, I would imagine so. The idea of having like most of my money stored in an asset where like an Elon Musk tweet can change the value by 20% terrifies me. So I don't really understand why people would be doing that. And unless you're, I guess, trying to evade sanctions or something in that way. But I think time and time again, we see people just going back to the US dollar because the US dollar provides security that Bitcoin does not.
Right. And if there's one piece of advice that we officially endorse on this show, it is if you have Trump coin, please sell. please sell before Trump tweets about it again, or wait until he tweets about it if it's something positive, and then immediately sell as soon as he tweets about it, because that's the peak. There's going to be a trough later. Now, explain to me finally, what is this broader agenda they have for the crypto industry that they haven't been able to get legislation scheduled for a vote yet? But like, what is this broader agenda that they're looking for?
Yeah, so the broader one would be that market structure bill. So right now it's the Clarity Act in the House. And so this is their push to shift all oversight of the crypto industry to the CFTC. But
this sounds terrible.
Yeah, it's not good. It is that Sam Bankman-Fried policy that seemed like it might pass at one point and stalled out because everybody realized he was a criminal. But it's surged forward in the past few months. And the other thing that I want to highlight about the concern about this is that the CFTC is currently facing the prospect of having one of 5 commissioners. So there's supposed to be 5 commissioners, bipartisan. Their terms are staggered so that, there's always some Democrats, usually some Republicans, a mix of the two, and they vote on things. But one of the Republican commissioners was just hired away from the CFTC to be the CEO of the Blockchain Association, which is a crypto lobbying group. One Democrat recently left. Another Democrat announced her intention to leave. The remaining Republicans have announced their intention to leave as well. And there's only one nominee right now in the Senate, Brian Quintes, who's Trump's nominee to be chair of the CFTC. And his most recent job was working as the government affairs guy, basically a lobbyist without registering as a lobbyist, for Mark Andreessen, a venture capitalist from Silicon Valley with billions of dollars invested in crypto. So we're looking at the prospect of them passing this bill, which basically shifts all regulation of the crypto industry over to the CFTC, and then having the CFTC be governed by a single guy who is a former crypto lobbyist. That's a recipe for disaster.
That sounds actually comically awful. That seems like almost as bad as he gets.
Yeah, and there's no really quorum mandate for the CFTC. If there's only one member there, that's the only guy that needs to vote. So, there's a chance that we're looking down a situation where all regulation of the crypto industry goes before a board of one guy who just unilaterally decides the future of commodities and futures markets in the U.S. And obviously, not that your listeners need reminding, but the CFTC kind of missed the ball, not necessarily exactly through their fault. There were other factors at play, but on the housing bubble in 2008. And so, futures and commodities trading can get very dangerous very fast because people can get very leveraged. And so the ball kind of compounds. And so we get this big snowball effect. So the idea of integrating crypto assets with the traditional financial system without adequate regulatory oversight could result in dangerous economic downturns for the entire global economy.
Well, this is basically terrifying no matter what, because even if crypto isn't integrated, this agency is going to be completely useless with like this one former, like basically lobbyist guy running it. I had no idea that was happening. Guys, the more you know. Not only does nobody work there anymore, but it's also going to be run by one guy who has an ideology which is completely opposed to regulation. Fantastic, amazing. I feel great about the state of our country. Henry, is there anything that we did not cover that you'd like us to cover?
Yeah, I'd just like to, I work at the Revolving Door project, and a big part of what we do is cover the Revolving Door. This is something that, everybody learns about in government class in like 12th grade, and then kind of forgets about. And in Washington, D.C., they don't just forget about it. They pretend it's cool and normal, to go from regulating crypto to going to work for crypto. The way that the crypto industry has really built power in D.C., it's not just through throwing money at campaigns. It's not just through hiring tons of lobbying firms, but they have hired so many powerful individuals to kind of do their influence peddling, both on Capitol Hill, in the executive branch, and in the media. And I just think that that's something that I'd like to bring attention to, because the elected officials who go start working for crypto should be ashamed of themselves. And same goes for regulators. So it's not just that CFTC Commissioner Summer Mersinger, who recently left, but I think this week it was announced that David Plouffe, who was a senior advisor on the Harris campaign and Obama's 2008 campaign manager, went to go work at Coinbase. While he's at Coinbase, he'll be working alongside Kirsten Sinema, the former senator from Arizona. He'll be working alongside Mark Esper, Trump's Secretary of Defense, Stephanie Murphy, a congresswoman from Florida, Tim Ryan, a congressman from Ohio, Pat Toomey, a former senator from Pennsylvania, and Trump's 2024 campaign manager, Chris LaCivita. So that's just at Coinbase. When you kind of think about like that type of roster, you kind of start to understand how they're able to execute their plans.
Yeah, not only do these people allow them to get more access and be more effective in lobbying for their agenda, but often the knowledge that you can get one of these really well-compensated positions is basically a bribe in advance, because people will vote in different ways, act in different ways, regulate in different ways, knowing that if they can win the favor of this company, they can get rewarded with a great position afterwards. I've seen this in the state of Texas. I worked in the Texas state legislature for a period of time, and it was very normal for chief of staffs and legislative directors to push really hard for a special interest groups bill. One example was Airbnb's legislative priority. And then after that session, get a fantastic job making 2 to 3 times as much as they were previously by that industry. The idea that that's legal is insane. That's the exact kind of corruption that's one of the few things that Americans agree on. They believe the government is corrupt, they're correct, and they want it to be fixed, but it never seems like that actually ever happens.
Yeah, and the crypto industry has been like, most industries are just able to sit there and imply that kind of bribe. But Brian Armstrong at Coinbase has been very vocal. I think he actually tweeted about it, saying that they will never work for a law firm that hires anybody that worked at the SEC under Gary Gensler. So he was very open that if you defy him, he's not only going to make sure that you don't find a job at his company, but he's going to exert his power to ensure the fact that you will not be able to seek employment at any law firm that could possibly be hired by him and his friends. And so that's like really powerful. It's a very strong threat. Obviously, I'd prefer if these civil servants were able to work in long-term, well-paid, well-compensated positions at the SEC, just keep their public service going. But with Doge especially gutting the executive branch, the idea that civil servants might need to seek employment elsewhere is increasingly present. And so these types of threats are real, and they are going to affect people's behavior.
Yeah, the CEO of Coinbase just sounds like a fantastic person making that threat. Doge clearly prioritizing cutting real waste and inefficiency by firing people that regulate our very fragile financial system. As we saw in 2008, there really is no risk. So why would they ever need to be regulated? I don't understand it, frankly. Henry, thank you so much for joining and making all of this make infinitely more sense than it did previously. Guys, call your legislators and bother them, especially if you live in swing districts, and tell them that you don't support these pieces of legislation, especially in the Senate. I think the Senate, it's going to be narrower. There's some Democrats which are currently supporting the Genius Act that need to change their position, because right now it's not looking very great. And clearly, in my view, no Democrat should be supporting what the crypto industry has been pushing for.